Good morning. Happy Sunday, everyone, and welcome back to our weekly appointment with a market recap with Joseph Di Virgilio and Irfan Khan.
For those who don't,
Today,
oh yeah, sorry, go ahead. Sorry, friend, go ahead, keep going.
no, please, they need to hear your voice as well, of
Yeah,
course.
it's our third episode of the weekly market recap and outlook. We're very excited.
That's right, that's right. And we are going to get right into it, starting with the statistic of the week. How about that, Joseph?
Yeah, the statistic of the week: only 1% of fund managers beat their benchmark for 3 years in a row.
Okay.
And
So
you know,
you've been a hedge fund manager for what, 25 years?
25 years. That's
Did
correct.
you manage to achieve that at any time?
Yeah, for 3 years, exactly what the statistics say. It's funny
Wonderful.
because
Well, you were in the elite.
yeah, well, no, I mean, it was between 2011 and 2014, and that was the period in which Bloomberg actually ranked me among the top 10 best long-short fund managers in the world in a universe of about 12,000 long-short hedge funds around the world. So it was a big achievement for me. I loved it. I was very happy about that, and on the back of that, I raised a lot of money as well for my hedge fund. So it worked out.
I can imagine. I can imagine.
Yeah.
Okay, so before we get into
Oh yeah, but wait, for those who don't know me, yes. So aside being a hedge fund manager for 25 years on Wall Street, I'm also considered the grandfather of sustainable investing, having launched the very first sustainability focused hedge fund back in 2004. I figure I'd get that out of the way.
so at this point, you could probably add ESG to your last name as well.
Yeah, I'm pretty much as it all started with a visit from the Principles for Responsible Investing, which is a division of the UN who came to visit my office, and we went through days of meetings to try to mainstream my investment strategy around the world, and ESG was born.
Wow. Wow. Okay. Well, that's very interesting. Before we get right into it, into the main topics of the third episode, I would like to remind all of you, our audience, to if you're enjoying this content, which we're bringing to you on a weekly basis, please do not
unedited,
hesitate to
unedited, and
like,
simplified.
subscribe, unedited. Please like, subscribe, and share our channel with others. And of course, let us know your thoughts by commenting.
Click that
Okay?
subscribe button.
Absolutely. Yes, that's how you subscribe. So let's get into it. Joe, what's the market recap? What are the main topics? I think I heard there was a recent Fed rate cut of 0.25%. Is that right?
Yeah, we had a rate cut on Wednesday, which we discussed last week. It was expected 95% of the street expected a 25 basis point rate cut. We had another pullback from the technology sector. This is a clear rotation in the back of Oracle's earnings, which were a bit concerning. I wouldn't say, but concerning is a strong word. Slightly disappointing, maybe. And then Broadcom, which actually blew the roof off the house. I mean, it did great, but for some reason, market still expected more. So there's this rotation. If you paid attention to the market, you can see distinctively the Nasdaq underperforming the Dow and the S&P 500. That's usually an indication of two things. One, you see it's a late stage bull market where, according to behavioral finance, you usually end up buying the names that you're more comfortable with. So the big names, the large mega caps, as a defense, but not even that, because it was not a flight to safety this week. It was a rotation, a pure rotation from large cap to mega caps, and out of technology stocks for the most part. But the names in my portfolio got smacked the first time around at the end of the last month, but not this month. A bit on Friday, but so it's not so pronounced, and I'm still confident in a December rally and Santa Claus rally at the end of the month, beginning of next month. And the rate cut that the Fed delivered and the subsequent press conference that Jerome Powell had kind of says everything is fine, but everything is not fine at the same time. So, but again, if, and you see Trump going on TV saying, my economy is A plus 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 bullshit. If everything is so great, then the Fed shouldn't be cutting rates. But nevertheless, they did. And subsequent 2 more rate cuts next year if things stay the way they are, which I believe there will be more because things are not. We still have a lot of uncertainties with lingering tariffs again and geopolitical risk around the world, and so there are things that keep me with an eye open at night. But again, we are in a world where the Fed resolves every problem, right? So there we go.
So, in principle, for those who maybe are at a more beginner level, can we say that generally when the Fed steps in to cut rates, it's because they want to give a stimulus to the economy?
Yeah, that's exactly the reason why you wouldn't be cutting rates if everything was fine in an economy. You're cutting rates to make things, make money cheaper for
Sure.
people to borrow. So if you when you're tightening, it's because the economy is heating up, right? So you want to stimulate the economy with rate cuts, and in this particular case, that quarter percentage point, the street was crying for it, and they delivered it, and now they're in a data mode. They're going to review as data comes in, which for the most part, even this is another problem. We had this shutdown, the longest shutdown in the history of the U.S. government, and a lot of the data is still not coming in. So we didn't have unemployment report last month or for last month. Other pieces of data that the Fed obviously gets some of this data that perhaps is not released to the public in an official way, but we should be all caught up in January. Yeah.
Okay. Okay. Very well. So you briefly touched upon it a little bit earlier, kind of hinted to it, but would you say that we've had a second wave of some kind of a tech sector sell-off?
Well, there's this worry that the AI sector is overshooting in capital expenditure, and so now obviously expectations are sky high, and any small hint of an issue can resolve itself with a sell-off. But again, I think this is just a regular rotation. I've seen materials do well, consumer discretionary. I mean, if you're selling stocks, tech stocks, because you're concerned of a market top or some problem with the economy or whatever issue you have, you're not going to go buy yourself Ferraris and or Zegna, or so some of the luxury brands have done very well. That may be an indication of the fact that the ultra rich, I'm assuming, are the ones that are actually spending more.
Mhm.
But again, I think that we're in the initial stages of the AI revolution. There's no going back, and it's very different from any other tech bubble that we may have had in the past, as I have alluded to in the past myself. With governments being involved and competing for leadership in the AI revolution, while
Yeah, as we mentioned, I think it was last week or the week before. I mean, this time around, we have governments stepping in firsthand way more than they did 25 years ago when we had the
dot-com
dot-com
bubble,
bubble,
or
right?
even if you go back to the 50s and 60s, when the microchip was the integrated circuit used to be called back then. So it's a different story here, a much different story.
Mm.
Yeah.
Okay. Good that you pointed that out. Are there any particular stocks that you have put under the radar
I
this
have
week?
bought last month QuantumScape. QuantumScape is a company that it's developing. Has nothing to do with quantum computing, by the way. It's just QuantumScape is a manufacturer of batteries, solid
Hmm.
state batteries for EVs and if you want to even call them data centers, but it's EV mainly. And while I bought the stock quite high, it corrected, but I like the company for what they're doing. They're sending out their new prototypes to their partners like Volkswagen, and it seems like a technology that it's working. And I have high hopes for QuantumScape because it would make batteries cheaper, last longer, and have much more autonomy than regular lithium-ion battery.
Okay, great. I'll definitely be
Yeah, the
researching a
ticker
little
is
bit more about
QS.
quantum
Of
tech.
course, this is not an investment recommendation. This is just something I like. I invite everybody who watches us to do their due diligence and buy at their own peril. I mean, I like the stock. I know what my risks are. The company is not profitable yet. Sorry, I have a little bit of a cold. But I have high hopes for this company. I do.
Okay, okay, good, good. All right, so hey, it's the 14th of December today. We have just over 2 weeks to go before the year ends. What should we expect?
Again, I expect the market to continue. I expect a late stage rally here at the end of the month. I have a feeling that tomorrow will bounce back from Friday's sell off, specifically in the tech sector. There's usually some euphoria associated with the end of the year, and the holidays arriving. Like I said, 90% of the times, no, there's a 75 to 80% chance of a December rally because that's statistical, and then greater than 90% of a Santa Claus rally the last week and first week of next month. So I'm
Okay.
still the history's on my side. Anything can happen, but I'm faithful that stocks tech stock will gain
So,
some
so,
ground.
so basically, the takeaway here is, definitely, obviously, we don't have a crystal ball. We cannot predict the future. But if statistics and are to reveal anything, then the odds are in favor of those who expect somewhat of an uptick in sort of towards the end of the year. Then.
So yeah, I mean, it's still again statistically it's been like that, but of course the markets are the markets to do whatever they want. It's not whatever you think you get any rules set in stone. It may not be set in stone anymore the following day. So it just, but statistics are on our side, and if it's not going to happen, well, we just manage the portfolio as best we can and move forward.
Okay, great. Anything you would like to add before we close off?
I'm good. I just want everybody to let us know your thoughts by commenting. Let us know how we're doing and what you think. If you have any opinion on what we've discussed, leave us a comment below. We love to read them, and we'll speak. We'll see you next week.
I would also add, if there are any specific topics that you, as our audience, would like us to talk about, please do so. We'd be
Absolutely.
happy to look at it and see. Obviously, we're doing this for you as well. So obviously, what we talk about has to be something that appeals to your interest as well.
Yeah, it's a new
And
project of ours, and so if you can help us perfect it if you like.
absolutely. And last but not least, I will repeat myself. If you are enjoying this content, which we bring to you on a weekly basis, then please like, subscribe, and share our channel with others. And that's
That'll
it.
help
Um,
the algorithm, YouTube's algorithm, and of course, it would be greatly appreciated.
Absolutely, absolutely. Have a great Sunday, everyone.
Have a great weekend, all for whatever's left. See you next week.
Bye.